Looking into the crypto market, across the past 24 hours, we've seen total crypto market cap coming down, Bitcoin also coming down, Ethereum also coming down. In yesterday's video, I said we could be up for a retracement. There were very specific reasons for this. We're going to look through what they are in this video, and if there's more negative downside to come, or if things are going to rebound and go to the moon. Let's run the numbers. Hey everyone, I'm Ken from CryptoTradingKS and the CTKS method. If you're new, a very warm welcome, and welcome back CTKS family. My role, my job, is to help you to become more of a financial and emotional blessing to yourself and those you love through trading and investing. When we look through the cheat sheet, we can see that the main markets have come down, and also the crypto market. We see that flow of funds into the stable coins at the current time. We've got a little bit of negative action. Things are not down that much at the current time, and WIF is breaking the trend. Now, what happened in the past 24 hours? Well, it was basically that first click, the volatility. The volatility has started to go positive. Now, what is this all about? It's important you contextualize market action. The VIX has been coming down and down and down and down, but it's not going to last forever. Sooner or later, we're going to get a basing action like this and an uptrend. Now, when that occurs, we can expect the markets to pull back. The question is, do we get it now? Is it going down further, or has it already started back up? Unfortunately, the majority of people just look at the chart they're trading and investing in and don't look across the market in any way, shape or form. Therefore, they don't know why it comes up in terms of price or why it goes down, and therefore they put themselves at a huge disadvantage. Our community is incredibly different. We look across the charts, we look at intercorrelation and interconnection. And if you're liking the content so far, please smash that like button, and if you're new, don't forget to subscribe. We have the best community on YouTube. A lot of people typically look into a chart, of course, that they're trading or investing in to try to figure out where is the support and where is the resistance. Now, the problem with this, all charts are intercorrelated and interconnected. For example, you might look at this blue line. What the heck is that blue line? That is Bitcoin. And we can see Bitcoin has been coming up and it's starting to get a little bit wobbly. Why is this? To be able to answer the why is this, most people just refer back to the news. Of course, the news must be able to explain exactly why past price behavior printed. Well, sometimes it does, and sometimes it doesn't, and most of the time it doesn't. What typically the news does is there is signal in the news, but there's also a lot of unfortunate noise that tends to get into the news. Now, what's actually happened to Bitcoin is relatively straightforward. The VIX is starting to base. Now, when the VIX bases, that means that we could have a changing of the guard between the different rows of the cheat sheet. And one thing that we noticed in yesterday's video, the VIX futures were starting to rise. This means that we anticipate the VIX proper is also going to rise. We could say right now that the VIX is taking the bus of risk and it's taken over from all the other drivers inside row 1 and row 2. And if you're not sure what I'm talking about, yesterday's video is a ripper. But the understanding is this: when we look at the futures are all about traders and investors trying to figure out, well, especially traders, trying to figure out where things are going to be, funnily enough, in the future, rather than what they are currently right now. So if we anticipate the VIX futures are going up, this means that the VIX proper, which only trades during the market open hours of the US session, we anticipate it to go up as well. TF Theta, Sanjeev, Tails and J-Link asked for a deeper dive on the VIX, so let's get into it. The VIX is the fear gauge of the main market. the S&P 500. So when the VIX drops down, we anticipate the fear is coming out of the market and the greed is coming in. So we would anticipate that the S&P 500 come up. Now, when the S&P 500 comes up, the NASDAQ, the Dow, the Russell, Bitcoin, total crypto market cap, and all the alts tend to follow. Therefore, keeping your eye on the VIX is incredibly important. Now, we could just look at the VIX without any structural analysis whatsoever, and we get ourselves into trouble because you need to know where all the support and resistance levels are inside the chart that you're looking at. This shaded area is called an SZ, or Stanfield Zone. SZs are very powerful. They aggregate SLs, called Stanfield levels or CTKS levels. CTKS levels are undoubtedly the most powerful technical indicators available. I'll talk a little bit more about that, but we need to interpret what's happening with the VIX. We saw that the VIX was seeking to either break up or break down. When it broke down through a negative CTKS gap and required so many levels of structural support to capture price. And what's happened is that we've found a large area of structural support and we are basing. We know that when we base in terms of the VIX, that throws negative price momentum into crypto. And it also starts to weaken the lesser market indexes, such as the Russell and the Dow. Of course, the S&P 500 tends to go flat at times like this, but in this direction. Now, why does all this matter? You might look at it and say, but Ken, I'm trading Solana, for example. Why do I care about the VIX? Here's an overlay of the inversion of Solana. Now, I'll just uninvert it in a tick, but I wanted you to see this directional correlation. If you look at Solana and you say, I don't care about the VIX means nothing. You can certainly do that, but you'll be leaving a lot of money on the table at the wrong times and taking a lot of losses where you don't need to. Okay, just putting Solana back to the price strategy that it should be going at. Now, when we look at Solana, it's currently 176.80 cents. You can immediately tell if a chart is inverted by just how scales work. The low number should be at the bottom and the high number should be at the top. If that is reversed and the high number is at the bottom, you have an inverted chart, an easy way to check. Now, one of the things that we can see, the VIX, when it was coming down, signaled risk-on behavior inside Solana and of course into the crypto market. Now, what we've seen is that Bitcoin is starting to detect the VIX may be starting to come up. That's why in the last 24 hours I said beware. Beware as in not panic, not anything like that, but just know intercorrelation and interconnection. We're at a pretty important stage here inside market charts, and this could just be easily applied to Bitcoin. Well, let's do it. Overlaying Bitcoin, and this of course is not an inverted chart. Big number at the top, little number at the bottom, it's a normal chart. But this is on logarithmic scale, not arithmetic scale. Now, when we see Bitcoin, as the VIX was coming down, Bitcoin was going for it. But as the VIX came into structural support, Bitcoin picked up on it. There was the potential of going down further, which rallied Bitcoin until Bitcoin figured this thing is basing and it's starting to come up. Bitcoin is hypersensitive to risk, and a hypersensitive asset class is the best way to measure risk on and risk off inside the market. This is risk on, the VIX collapsing. This is risk on, the VIX coming down. Understanding intercorrelation and interconnection is vitally important, but directional correlation won't help you out whatsoever if you don't understand where the structure is. Our strategy from here is very straightforward. If the VIX starts to get above where it is right now, it has a positive CTKS gap up until 2160. You remember the VIX just plummeted like crazy, and that pushed crypto, Bitcoin, and the alt up by orders of magnitude. But of course, it was coming into structural support, and that's where Bitcoin got really concerned. Bitcoin can sniff out risk 1,000 miles away. Now, what does it mean to us? If the VIX starts to pass through this positive CTKS gap, it doesn't have any real structural resistance until 2160. This is a bit of a problem because we may see an inversion of this. If the VIX comes up, crypto and the alts, as well as the major market indices and stocks, will go down, and they could go down really hard, really fast. This will catch a lot of people off guard. We already know where the gaps are inside market structure. And you learn about SCs in Level 2 Standard Certification. We'll have a look at the S&P 500 structural level just in a minute, but you can see that the S&P 500 has been coming up since the 9th of April. It's been doing really well. You can say from the 5th of April. It's very likely that we get and we can see a bit of a sell arc actually developing inside price at the current time. So getting a retracement is not an issue. Price is always moving in a wave. Price is always coming up and down, up and down. That doesn't break an uptrend necessarily. Keeping your eye on the VIX is really quite important at this time. Now let's have a look into the structure of the S&P 500. Looking at the S&P 500 across the past couple of days, we can see a little bit of a weakening trend just currently. It's not really decided if it's breaking down, breaking up, or what it's doing. Therefore, we must look at structure. Marking up structure with the CTKS method is an absolute game changer because you'll see the buy and sell levels that the institutions look at. Retail will never see these levels. What we can witness is there was a reasonable positive CTKS gap up until around that 58.88 mark, and then we ran into overhead structural resistance, and it's been trying to confirm that as support. It's wobbling around somewhat, and there are levels of structural resistance inside the market as well as levels of structural support. The key thing here is if we see a failure in the S&P 500, it will be because the VIX is starting to spike. A really useful thing that you can do is to overlay on your chart Bitcoin as well. So an overlay of the S&P 500 and also Bitcoin. We can see that directional correlation. Now, what is Bitcoin signifying into us at the current time? Well, we've seen a retracement in Bitcoin. It is not a pre-drawn conclusion that we will necessarily go down and the VIX will spike up, at least not yet. We need to hop across to Bitcoin structural levels to figure out what's actually occurring. But one thing should be really clear to you. On a 15-minute time frame, you can see that Bitcoin and S&P 500 are just following each other. They're like best friends, they're hanging out. The cheat sheet will give you an incredible aspect of the financial markets that you can profit from. And when we look into row 5, which is total crypto market cap, Bitcoin and Ethereum, MicroStrategy or Strategy now is just charted on row 4. But we can see in terms of total crypto market cap, it's selling down. Bitcoin is also selling down. But we know price waves are always structurally bound. So we need to understand what the structure is right here, right now. Getting used to structure is very valuable because you'll understand that all price waves are governed by structure. When you can see what CTKS students see inside any specific price chart, you'll start to develop X-ray vision inside financial markets. Now you can mark up your own charts with Level 1 and Level 2 Standard Certification, or you can have us do it for you. Now these lines can be a little hard to read on the public channel, so I'll just wish this across and give you a better view. Okay, I'll just enhance this a little bit for you. So when you look at this particular action, we had structural overhead resistance across the entire crypto market at this specific level. What happened then? We had a structural failure which opened up these levels of structure around the 3.3 trillion. Now, a lot of people don't know how to read total crypto market cap, but what you basically do, you just overlay the fingerprint of this chart and it will make a heck of a lot of sense to you. Now, what are we doing right now currently? We're at 3.28 trillion, but when you look through this, we're just hovering around a specific area that doesn't really have a lot of structure in it. This is where intercorrelation and interdependence come in. We can see that there are levels of structure underneath the current area and stronger ones. So we would anticipate price could get just caught in some of these levels and retrace back. If we had a negative CTKS gap below the current price, we could get structural overshooting. Therefore, we may see a degree of negative consolidation inside the markets. It realistically depends on what happens with the VIX in the next 24 hours. Looking at Bitcoin is really important because Bitcoin and total crypto market cap hang together. They're like best friends. So many best friends inside financial markets. What we want to do now is to actually put the indicator on. So I've just put this area in here so you can see structure a little bit better. So you can see around that 104,739 mark, around the 104,744 was overhead structural resistance. When that came from structural support around that 103,162, it came up, donged itself on the head and retraced all the way back, and then tried to rally. The sellers were too hard, too fast and furious and pushed the price down. Why is this the case? Because the VIX is basing. A lot of people will tell you a lot of different reasons about why Bitcoin's chart is moving. And of course, some of those reasons are fair, but most of the reasons are structural by nature. Now, what do we see here at the current time? We see that Bitcoin is weakening. This weakening is opening up around this structural support level of 103,180. And if you would like to get this indicator, just pop across to ctksmethod.org. We're seeing a degree of weakness inside the crypto market, and we know the indices are way overextended and very much due for a price pullback, which would make the upshoot healthy that comes later on. Always remember, price is always moving in a wave. It moves in a wave between structural support and structural resistance levels, and there's a lower structural support at that 102,575. Understanding where structure is vitally important. Recently, we saw a big sell down in gold. That coincided with the tariff agreement between China and the US. Don't forget, temporary agreement, not permanent. But we can also explain this from a structural stance as well. For example, just popping on the indicator, and this is a row 2 indicator, we saw up at this structure, 3241, it was quite a good level of structural support, and it was retested and retested until it fell on the tariff news, the tariff agreement news. But when it fell down to lower levels of structure, the 3187, and down a little bit further, the 3175. The important thing to note, even though there was a negative CTKS gap, all of this structure held it firm. That's why we read to the right when it comes to looking at CTKS method structure. It is undoubtedly a superpower, and I have something very special to tell you about. I'd like to tell you a little bit about Level 1 and Level 2 standard certification. When we look at Level 1, this is the primary foundation that we use to mark up charts, but all the magic happens inside Level 2. They look like just pure dotted lines, but they're not. For example, when we look at Level 1 standard certification, there are actually a lot of things that we need to do in order to be able to mark up charts just from a basic stance. However, it's inside Level 2 standard certification that everything makes sense. There is a lot to it. You may think that it's just drawing a couple of lines on a screen. Nothing could be further from the truth. It is an incredibly fine art, but it's easy to learn. And I make sure that I go through step by step with you. Please feel free to reach out to me on LinkedIn and just directly message me. You'll find those scholarships are absolutely unbelievable. you will acquire a skill that you can apply for a lifetime. No matter what your investing or trading strategy, it's a really good idea to look at total crypto market cap as well as Bitcoin, especially from a structural perspective. They can give you an incredible insight into what the VIX is doing, and the VIX unequivocally is driving all financial markets currently. Buying is undoubtedly your superpower, and Rule 7 can really help you out. Buying creates profits. It's where you buy ultimately that matters. If you buy effectively, you'll find that you can ride out any storm. And when inside financial markets, be like this little guy, always make in advance probabilistic choices. Now, what does this mean? It basically means if things are going up, what happens if they continue to go up, if they flatline, or they continue to go down? Most people just say up only, it will never ever come down. Okay, well, we know that's not true because price moves in a wave. If we're in an uptrend, that's good. If we're in a downtrend, that's okay as well because price moves up in a downtrend. So you can make money in any financial market by doing something called BORSOGing, which is buy on red, sell on green. But it means you need to be prepared. And a lot of people don't necessarily want to know that the VIX is basing. They would prefer some kind of story that it's just going to go up and up forever, like everything will go up. Well, inflation may do that, but if it comes down rather dramatically, you may find that that particular story has you selling at or near the bottom. So therefore, making in advance probabilistic choices is a really, really good idea. That way you're not caught off guard. For example, if you anticipate it to go up, you may give it a percentage, like I think 80% it will go up. 10% it will flatline and 10% it will go down. Or it could be something like this. I think about 90% probability that it will go down, 5% flat, 5% up. You can change those around each and every day because when you read intercorrelation and interconnection, you know the price is just moving in a wave. A downtrend or negative price action doesn't necessarily break the uptrend because percentage changes do not mean trend changes. And I'm really happy that quote has helped people out. Please let me know what's one of your favorite rules that I've shared. And if you've got a favorite rule of your own, please share that as well. It's fantastic to come together as a community. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.